Good morning, everyone. My name is Josip Kasik. Today is March 4th, Friday, the expiry. I just want to confirm the sound check. Those of you who are present, if you can tap in a chat box that you hear me, I would greatly appreciate it. Also, I'd like to suggest to you that you read this disclaimer. The following videos are for educational purposes only, and we are not financial advisor. We are encouraging you to post the questions in box. Hi, Joe. Hi, Christian. I'm glad that you're here. And we don't provide any financial advice. Send any questions to support. If you would like to contact me, you can do that right here at josip@tradewithufos.com. And I will now present to you the agenda for today. So my plan for today is to go over what currently is a bigger picture of the SPY. Then I will place the live paper trade. And this live paper trade is going to be actually on XLE because I took the time to look at it and I kind of like it. And I think that should be done within the first maybe 15 minutes of the session. So between the 11th minute to the 15th minute, I'm going to be placing that live paper trade in the Thinkorswim account. And then I'm going to take the rest of the time to explain this particular trade. So if you're good, please type in all good. Hi, Mark. I'm glad you're here. And then I can continue. Another thing that I want to share with you that I'm very excited, and Jose and I have been working hard to have this on this Trade with UFO, where you usually go down to post the questions. We decided to create a separate page. Instead of me posting here options with option session or my sharpening session, we have here section just for the Josip last session. So my very last session that I did, notes are posted right here, and you can actually see the screenshot from what I did, and then I went ahead and I extracted this information. And I think that it would be good if I just cut this and actually even place it in a chat box so it's easier for you to access that. So as soon as you get that, if you can kind of confirm it that you're good, because this is where probably at the end of the day I'm going to be posting all these notes. So one more time, I'm going to go over the SPY right now. Then I'm going to jump in Thinkorswim Platform, place the trade in XLE. And then I'm going to go ahead and explain what I did in those few minutes, because execution, once when you know what you're doing, doesn't take that long. But I want to make sure that I don't lose you, because I want to see the results of that trade maybe within the next 45 minutes. So here's a SPY, and we're gonna start looking at the big picture, meaning we're gonna look at right here what SPY is doing in relationship to the 9-day exponential moving average. Then we're going to look at down here, what are these dots are showing us as of this morning. The next thing, we're going to move down to the lower studies, and we're going to look at it. Is the put versus a call in terms of the volume greater or lesser? And then when we're done with these three, we're going to move to the automated unfilled orders, UFOs. We're going to look at different calibration at the 55, 89, 144, and 233. And I might even show you the option value map just for a second. Then when we're done with that, we're going to jump on XLE and do it. So in the relationship, what the market did yesterday was really, really interesting, that we on a SPY have closed above the 9-day exponential moving average, which mean, according to Auto Climate, that should be the first day that the uptrend is confirmed. However, that's no longer case this morning. Well, even yesterday, it was a thin dot, and you can feel free to type in a chat box if you know what the thin dot stands for. So, thick dot has a different meaning than a thin dot. Yesterday, we had the thin dot, and today, depends how the day closes. We might rally to the top, close above the 9-day moving exponential average. That would be something, but you never know. Or we can close below, and then it would be just like Joe says. It would be completely contradictory to the bullishness. So yeah, you're all correct who type in unconfirmed on the climate for a bullish section. And that's why I said to myself, you know what, I'll give the rundown of the SPY, because it's kind of follow up what Jose did with you yesterday when he went with it. So moving on, away from auto climate down to this implied volatility. And as you notice right here, if I double click on it, you will notice that this is actually smoothing it with the 3 days. So this information right now shows over the last 3 days. The gray line represents the put, the blue line represents the call. There has been more put activity on a SPY, which in my opinion should be construed as a bearish versus a bullish. Plus, on the top of it, the market is down as of this morning. So this right now, it's kind of indicating the slight bias towards the bearishness, putting into the greater picture of the geopolitical situation, you know where, and I don't need to go into that politically. So moving on to the UFOs, what I want to point out to you that on a 55 calibration, we have a situation that we are away from this unfilled orders that are at 43.3880, and we are also away from the unfilled orders on the bullish side, which are at the 42.21. So we would be called somewhere in between the two zones. Now, this is just what we are observing here based on the fact that we are looking only at 55 minute calibration. But if we would check and change this to the different calibration, then the situation would be different. So what I'm going to do right now, I'm going to simply point out that I took a little bit of time before this morning to prepare and to actually extract the information for what currently is taking place on a big picture for the SPY. So if you look at right here, so 55 has this calibration, 89 has a 41 calibration, and 43 has a calibration that is slightly better than the 89, but the 233 it actually has a worst possible calibration. Now, the question becomes, what does this percentage measure? That percentage measure how frequently the price action reaches the opposing or the rival UFO. So if it goes up and hits the red unfilled area of the resistance, how frequently does it go down all the way and touches the opposing area and then bounces opposing. So UFO, regardless of the color, means that if it's greater than a 50%, then that would be directional. If it's a less than 49%, that would be non-directional situation. As you can see over here, when I bring up that calibration for all of it, all the numbers are lesser than. So I've been 9 minutes now elaborating on SPY. The simple conclusion is there is no directional trade on it. Therefore, I'm moving on now to place the live paper trade on XLE. I said I'm going to do that between the 11th minute and the 15th minute. And I'm going to now bring in the Thinkorswim platform in it. And when I bring in the Thinkorswim platform in it, I want to make sure that you understand that you won't get what I'm doing now, but in a few moments, I'm going to actually explain what I did with it, and I'm gonna then place that trade on. So just give me a moment to drag this Thinkorswim platform in it, and then we're gonna place the trade. So one quick moment. So here's a platform, and you would notice over here I type in XLE. I'm gonna actually select May, and obviously May has only one choice, and that is a regular expiration May that goes out on the May 20th of this year. So my first thing that I'm going to do is I'm going to share with you the strike prices that I'm doing. So I remember Joe last time said that he understands better the call side than the put side. So Joe, I appreciate that comment, and I'm going to try to accommodate this time. Same way, I'm going to place the bullish trade on energy. As you know, in the news, what's happening there with the nuclear reactor and everything. Energy is currently this morning through the roof. As you can see right here, it actually shows that even in the down market, the energy sector is up. We're actually up $1. So I'm planning to buy the 75 call for a May and simultaneously sell 80. And the way how this is done is not that difficult. I'm going to single right click and I'm going to go ahead. I'm going to buy vertical, and I'm going to point out to you over here that my share size is 10 by the default setting. Okay. And because it's a 10 by the default setting, I want to make sure that you're aware of it, that you need to tweak it down to the single one. Okay, so this is $1.88 that I'm actually putting online for the maximum profit, which is pretty good, 312. Let's see if I'm going to get filled on that. So I have placed that thing, and I'm going to the monitor tab. I'm opening the working order, and I don't have to open a working order because it already got filled. And I have gotten something that is called price improvement because I was willing to pay them $188, but they gave me price improvement to $186. So I'll explain all these things in detail, but I just want to make sure that you kind of follow what I'm doing next. I want to now finance the same thing with the selling of the 75 put. And of course, I want to protect myself, so I'm going to buy the 70 put. And I know that the price of my cost is a 186. I would like to get more than that. So how do we do this? We single right click on a 75 put for the same cycle. We go where it's sell vertical, and we observe that they have a minus sign for 75 and a plus sign for 70. And they're giving me higher credit of 225. Now be aware of it, because we're on the put side. We need to change a contract side from a 10 down to the single one, right? So I'm changing now down to the single one. I'm going to ask for 227. There's no guarantee I'm going to get filled on that, but I'm going to ask for it. So I'm sending it in, and this thing is going to be sitting there. And I want you to know right now that I have a buying power effect. If I would cancel this working order, it would be different. Right? So I will not now cancel this working order. I want to work it in such a way that I'm going to say, well, all the exchanges are saying that I'm a little bit greedy, because in reality, if I now go ahead and create a duplicate order, they're willing to naturally rip me off and give me less capital. They want to give me $215 instead of giving me $227. And all the exchanges are seeing this, and they are not willing to trade with me. I have fired this trade in at 8:13. Oh, guess what? Patience paid off. I even got the price improvement. This is $2.30 of the credit that I had received versus my outlay of the capital of 186. I'm taking the snapshot of this for a simple reason that I would like to put this here so you would all understand that I'm going to be working from this area, and later on when a session ends, as I have pointed out to you, that screenshot is going to be right there, right in that area, right? And probably these words are going to read pretty much the same way. That is, after quick analysis, and back then I looked at the QQQ, now I looked at the SPY. We decided to do, over here I did a double bearish vertical, but obviously that's not the case here, because if I bought the bull call and finance it with the bull put, then that would be double bullish vertical. So now I'm going to check the time. We're almost perfect on time. I said between 11 minutes and 15 minutes of my presentation, I'm going to fire the trade in, and now I'm going to take the rest of the time to explain it. So one more quick thing that I want to point out to you here before I get deeper on the platform and explain it, and that is this. How much capital have I outlaid? The amount of capital that is outlaid is only $500. Only $500. So this data is a little bit delayed. I apologize to you about that, but you know what? For all the practical purposes, this is education that you need to be aware of it, that when you're looking at this whole situation from the beginning to the end, really the outlay of the capital is following, right? I received a credit of $230 and instantly have used the money of the 186. That's mean that I'm ahead by $44. That $44 is enough money for me even to pay all these 4 commissions. So I'm going to just now slowly show you where you can see this. If you would go into your account statement and if you would open up the cash and you would look at right here, the starting balance of this paper trading account, I kept it at a little bit more than 25 because that's for a day trading purposes. So I changed it to 26,000, has now after this transaction jumped to the 2641. And why does that jump to 2641 when in reality it was supposed to be 2644? Well, it's simple reason that they pay themselves $2.66 of the commissions and also miscellaneous fees. So having said that, I think that makes a perfect sense now that I go ahead to the platform now that I know all this information and I kind of work with you the logic behind it. So now I'm starting from the beginning. I look up the XLE and I'm doing the same analysis that I have done on a SPY, starting from the top. Do we have an uptrend right here? Yes or no? Feel free to see whether or not. Okay, Joe, that's great that you got filled. You had the price improvement. I trade on a paper trading account that had a little bit delayed data. You are in a real time. You got a different price fills than me. So I'll do my stuff. You can at the end go to your exact fills and change it, and you'll see numbers are gonna all match up. So I'm pointing out to you here that we have a standard deviation that shows us that for 3 days we can be that for okay, let me redo this one more time. Standard deviation in blue, it shows me that for about 7 days XLE can go up, and we've been going up, as you can see over here, 5 days. So for 5 more days we can go up. We can go up. In terms of what we did over here, we utilize both the calls and the puts. So I know over here there's more activity on the puts versus the calls. However, I have utilized the puts on the bull put side, and I have utilized the calls on the bull call side. So I have engaged in both of these things. So again, one more time, just the emphasis over here shows that this is for the 3-day smoothing. Once when I go over here on the chart, and I'll actually point out to you that I should be on a daily, but because I have prepared myself earlier with this whole thing, I can actually even share it with you what I have gotten on the XLE. So on the XLE, these are the numbers, and you're going to be able to confirm it here with me in a second. Just be patient. I want to bring up the document that, just like over here, we had the information for SPY on the 55 calibration, 89, 144, and 233. I have done the same thing for XLE. So this is information for the XLE, which stands for the SPY's energy sector. And energy sector includes the solar, includes oil, and of course electricity and nuclear power, right? So we got that over here. So let's start with the first one, 49.47, right? 49.47. I'm going to just tuck this thing away. 49.47. If I now go ahead and say, well, it's very close, but it needs to be over 50. And why do it needs to be over 50? Because we said that percentage measures how frequently the price action reaches a rival UFO from either one side to another side. If it's greater than 50%, then we should take a directional trade. We didn't touch the SPY because the SPY didn't have anything around the 50. This is very close to the 50, but I wanna show to you that if we keep massaging it, as Jose says, we're bound to get something. So I'm looking at the 89 calibration. I'm going to just sip the water while thing is loading. It's even lower. But how about if you look at the 144 in terms of the calibration? What do we have then? Well, it's even lower than the other one. And then you're saying, well, then that's not a good candidate. Let's look at the longer time frame, 233. And I want you to observe that on a 233, as soon as this thing loads up, when I was taking the statistics, it was greater than 50%. So type in the chat box if you're good with my, what I like to call technical analysis using the top Tradictive Option Planner logic, how I arrived that I shouldn't trade the SPY, but I should be trading the XLE, because I want to go slowly, and I do not want to lose anybody who's present here, because over here we have a 50 on all of this on a SPY. We didn't have a 50. We did not have a 50. Therefore, if we did not have a 50, there's no directional trade. On XLE, there's no directional trade on a smaller time frame, but on a bigger time frame, there is. Yeah, so in the case of our target right now, Mark, I'll come back to your question in a moment. I want to just get to what I get to, and somehow along the way you will see that question does get answered anyway. So what I'm doing right now, I'm selecting the area of the previous high, right? So what I'm going to do now, I'm going to even go further out in time than 233 days. I'm going to pull up the weekly, and I still don't see anything higher than that. So I will need to go even monthly, because I want to see the opposing high. And as you can see right here, let me just remove this box so it will not be on my way, so you will be able to see it. Do you see better now? That this area right here, maybe I do need that in this area approximately we have we have an area of the resistance and we are approaching it. So I'm going to select exactly 70-70-20 as my target. 77.20 is going to be my target. So let me now put this in my notes, because it's very essential that you understand, if I'm building the trade, my XLET stands for a target, is at 77.20. So the beauty of having the top Tradactive platform is very simple. I select that area of the 77.20, and I'm gonna now ask Tradactive or a top option planner to spit out for me the choices. So what I'm doing right now, and I'm going to stop here for a moment so you can take a print screen, take a snapshot. Down here, I'm sending to the strategy builder, Tradactive option planner, top, Tradactive option planner. I'm sending now into strategy builder, target on XLE of 70-70-20, and I want the platform to spit out for me, first of all, what date are we going to be hitting, taking into consideration also the earnings and everything else. So notice over here in this area, I'll do this one more time so you would see where I'm starting to look at the information. We have a target date. This right here has saved you a tons of time going through the option chain and debating, should I do March regular option, should I do April regular option, should I do whatever, May, June, July. It says most likely we're gonna hit this target by March 28. So if you're gonna hit this target by the March 28, obviously our expiration for the March of this year is going to be on the third Friday, and the third Friday is actually on the 18th, and this right here, it's stating it's March 28th. So I do not have ability to select the March option, but I can select either April option or the May option. That's the first step of using the stop planner. Now notice over here, I'm gonna uncheck this area right here that says hide the risk graph. And the reason why I'm unchecking this right now, so I can scroll this thing down and see how much money am I risking if I select certain options. Now, as a reminder, and that's why I like taking these notes and then later on putting in an Excel sheet, I have selected 75 on a both legs. So that would be almost like that long synthetic that I have done. And I know Mark has attended that session, and I think, I don't know, Christian, were you present at the time when I was presenting, or Joe, that live session on the long synthetics? Let me see here. Maybe I can go.
I'm up for $190,000 since joining.
And send you
I want to give you a copy of my book, Options Trader Secrets,
really
so you can learn all the
this,
secrets.
Perhaps rewatching the long synthetic would really be helpful for you. So there's a two long synthetic. I think I just picked the one that is a basic one where you actually end up, and I'm gonna just kind of write here a few things so you would understand what I'm talking about. If I'm selling this put right here, and I also am buying this 77.5 call, what do you think it's my aggregate delta on both of these? Remember, the double negative on a put gives you a positive delta, and buying of the call gives you also a positive delta. So for all the practical purposes, what I have done, I have created the long synthetic, but I have a little bit of the protection to the downside on my puts in case I'm wrong, just in case I'm wrong. all of a sudden there's a peace in the world and love and understanding and all this type of thing, and the market starts to go down, I bought 70 put to protect me from my obligation to buy at 75 if we drop down to 70. So I have turned my obligation to buy into a bull put spread by simply purchasing here the $70 put. So watch, I have received $585 of the credit and I returned them $350. And because I returned them $350, I still have a credit of the $2.30. So if this is kind of helpful, please type in, especially you, Joe, because I know you said like you are kind of understanding the bull call side and all this. It's just on the put that you get lost. So I keep that comment in mind, just like I kept Mark's comment in mind, from my long synthetic session when he said that he wishes that he had known this 5 years ago. And that's why I really want to help you with this whole thing to make sure that you understand it. So it takes a few minutes for the comment from Joe to come in. In the meantime, I'm going to go over here. And what I'm going to do here is print screen just for a bull call side. Just for a bull call side, because there's a lot of information here. But I want to just print screen right here for a bull call side. So I'm printing the screen for a bull call side. And I'm bringing in my document over here. And I'm going to dump in my document the bull call spread that shows the 75 and an 80. This is what it shows, 75 and 80. And I've gotten that just by checking prior to the session what is the situation in terms of the top planner selecting for me what should I do. And of course, I'm missing the numbers here. So what I'm going to do right now, I'm going to actually, again, print screen just this area that says a maximum profit and a maximum credit. So be aware of it. The second line matters for me. The second line matters for me, not the first one, but the second one. So I'm going to now insert that into my Word document and just explain to you that side by side, this line up exactly how I want it. This is beautiful. This is beauty. So ignore this number because that's a different spread. Ignore this number. That's a different spread. Ignore this number. Okay. So it was predicting to me that I'm gonna be paying $188 for that particular spread, right? I ended up paying $186. So I got the price improvement. You remember that one we got filled? So this is now the first part of the trade. First part of the trade. So what I'm going to do next now, I'm going to a little bit more elaborate on it by simply looking at the risk graph. So I'm looking here now on the risk graph just of that bull call spread. And I don't need to edit the spread because the spread is exactly the way I want it. This is the spread that I actually wanted to share with you. We are now up more than $1. Initially, we are up $1. Which means we are sitting somewhere around the $74, $74.27 in real time, right? And I'm looking right here, what is going to happen when we reach 80? When we reach 80, my profit is going to be maxed out. I cannot make 1 penny more than 80. And why would that be the case? Because what did I do at the 80? What I did at the 80 is I sold a call. So I sold to open the 80 call. So that's mean at that point, my obligation is to sell. Then the question becomes, what do you sell? Well, I have a 75 call that I actually bought. And that 75 call, if it's now expiry, let's just use the word expiry, and we are at 80. This $80 call is going to be well, okay, let's put the $80.02, right? It's gonna be at the money by those 2 cents, right? Then the question becomes, if at the expiry we're at 80 and 2 cents, how much is my 75 call? Well, it's worth $5.02. And I hope it's clear to you that all that I'm doing is simply subtracting $75 from the $80.02. So then you're saying to yourself, you actually made $5. So my profit on that spread would be $5 minus the cost. And my cost is $1.86. So I'm going to lose $1.86 because that is actually the value that I had to pony up for that particular spread. So what is the most that I'm making on it? Well, there's two ways you can figure it out. Like one way, you reject to do the math. You just go back to your platform that has executed it and you ask the computer to do the math. How do you do that? Now notice I'm back on the Thinkorswim platform. I'm going to single right click. Instead of green, it highlights it blue. I'm going to say create a duplicate order and I'm going to confirm, but I'm not going to send it. It says the most that you can make, it's what? 314. So what I'm going to do right now is very simple, okay? I'm going to create the order that is going to be opposite. I'm going to change my time in force, TFI, time in force, to go till cancel. I'm going to go over here to this little square to program it. I would need to minimize this in order to do this. So just 1 second. And then I would put the target. You remember my target is actually what? 777.20. And where we got that from, we actually got that from when we were, I'm going to just float this for a second so I can look at our target there at 77.20. This is where we're looking at the target. So when the price comes in that area, I want to close this. That's what I want to do. Okay, moving on to what do we do with our bull put side? Well, with our bull put side, we have done same thing. We have utilized. I'm going to type first what we utilize here. So I'm going over here. So I'm done. This is the bull call side. Now I'm talking about the bull put side. Bull put side. And I'm going to have a here conclusion. I know I said at the end, explain the rest of the time. So this is now explaining of the rest of the time. So this really visual is going to be helpful for you to understand what I'm doing. So these are the strikes here. Of course, this is a call side. These are the strikes, and this is a put side, right? So I'm going to start with the call side, right? So I'm selling to open 80 call. That's not my commanding unit. My commanding unit is actually 75 call, which at the time is at the money equaling the delta of 50. Okay, I'm moving on to the put side because this is what I want to talk to you about. I sold to open my commanding unit, which is 75 put. Double negative, it creates it into a positive. So this is still positive, delta of 50. So those of you who are present, could you type in, when you add these two numbers, what do you got? You get the one positive. And that's why this strategy that is composed of simply bull call spread with bull put spread. It's called double bullish vertical because both of them are vertical. Both of them are vertical. So let's continue with the bull put spread. I bought the protection. Where? I bought the protection at the 75. Now be aware of it. If I show this on a Thinkorswim platform, so I'm going to just delete this. I don't need to worry about this right now. I just need to point out to you here different columns that we can utilize. And the column that I like to use is a volume. Volume is activity for that one day. Open interest is ever since the existence. And over here, I like to utilize intrinsic. So when you're looking right here, my 70 is intrinsically worth what? Nada. Okay? But my intrinsic of the 75 is now worth 94 cents. Why would be that? Because when you take the 94 cents and subtract from 75, you actually get the current price of the 74. Okay, so on the put side it's a subtraction, on the call side it is addition. Okay, so I know one of you might look at this thing and say, well, Josip, you broke your own rule because the sold unit 75 put has traded volume of only 4 contracts. Yes, but I'm a seller of it, correct? That means I got paid for that particular contract, right? Let me pause this. If you're selling your house, you don't care how many people are going to say it's too expensive. You just need the one who's going to actually be willing to buy it from you at that high price. Okay? Now, what is more essential than this is, do I have a lot of liquidity on the one that I need to protect myself with? Yes or no? Take a look at this before I put the circle around it. Yes or no? I know it's going to take a moment, but I want to tell you that when I was looking at this, the market maker said to me, when you're buying something, there needs to be at least 200 contracts on the other side who are going to be willing to take it from your hands when your time comes in to exit, right? So over here, I bought this contract, and later on when I'm exiting, is there enough liquidity for me? Well, look at it. 3 digits, 3 digits, 3 digits. Do not talk yourself out of the perfectly good trade because there's only 4 contracts. Do not do that. On a call side, does everything passes my criteria? Glance your eyes on a call side. Maybe I'm going to even change the color to green to make it a little bit more obvious. So are we good on a call side with both of them? My commanding unit, the one that I should be most concerned about when I'm exiting, because the 75 call I'm actually buying, so I should be concerned about it. I'm buying, but once when I want to get out, is there going to be somebody to take me? There's, as of now, 1,132 contracts traded. If you want a shortcut to find out what is the open interest in the volume, you just switch here. The third line says the volume and open interest, and you glance at it. Do I have enough liquidity to say that this is good? I should ask now, yes or yes, but obviously I already answered my own question. So are we good with understanding that both the bull call side and the bull put side are not contradicting each other? They're actually good. So let's go back to top. And I know I floated it here. Let me just bring it back, but I floated it. So this was a bull call spread, right? So if I'm going to now edit this particular spread to be a put, okay, then I also need to edit the legs. So I'm selling the 75 and I'm buying the 70 on a put side. The reason why this stuff is highlighted, because we don't have a 70 and 50 cents, but we actually have a 70. And now I need to change also this is for buying. So what is happening over here on the bull pot, we're selling the higher one and buying the lower one. So now when I click this, okay, the name has already changed. So notice this is Intelligent Platform. It has already changed the name. And now I'm using the green because now I'm talking about the whole bullishness of it right here. It says a bull put. So I'm on a bull put, I'm selling the higher one, and I'm buying the lower one. Why does the risk graph look different than a bull call? Because this at this point, no matter how far up it goes, it does not matter, because I have gotten filled. And remember, what did I got filled? For more money or less money than what I paid for my bull call spread? For more money. So now I'm going to just enter these numbers into the filled column, and then I'm going to take a snapshot and make sure, once when I start wrapping up the session, that there's no confusion. So, Christian, or I don't know who exactly was it, Joe, says, I got filled at the different prices. This is where you would be actually changing the mid price into fill. You wouldn't be taking my numbers, you would be taking your numbers, and you would be typing in whatever the number is that you got filled. So if I now go back over here, I just want to show you on a put side, on my 75 put, I have gotten $5 and what is that? 85 cents. $5.85. Okay, so I'm typing $5.85. On my 70 put, I returned them $3.55. So now, of course, when I click this OK, there you go. You get this number right here that says 230, and of course, that's now simple kind of case because of the fact that this is what we did when we placed the trade. And now I can take this snapshot and have it ready for future when I do my notes for you, so you can track it. Okay, I didn't cut this properly. I will need to cut this one more time so I don't cut out any words here. So it takes only a few minutes to do this. So just 1 second. So I'm just cutting this piece and I'm stopping right here at the 230, and it's going to be placed in here on the bull put side. So when I dump it in, there it is. There's information. Bull put. I will do the same thing on. Bull call side, but I want to repeat the steps from the beginning to the end. So in these last, whatever we have, 14 minutes, you'll understand how I did this. I asked for the largest time frame to actually see where the resistance is. I saw this resistance over here in 2018 is in play. Then what I have done, I have selected my target exactly at 74.20 and 77.20. So 77, let's put exactly to the penny. I single right click, I went to the send to, I went to the strategy builder. Strategy builder has populated the date by which the target is gonna get achieved. Right now it says by the March 30th, earlier said the March 28th, while because the price is fluctuating, I have hit the risk graph and I start reading this before the session started, piece by piece. So first one says, oh, you can buy 80 and then sell 85. And then it's going to cost you only about $100. Yeah, but what's the probability of that happening? When you really think about it, that's mean I would need to be above that area before my spread even makes sense. So that's the spread that I said completely ignore it. The next one that was spit out to me, it said purchase the 75 and then sell at 80, and you're gonna have an outlay of the capital around $180. Don't worry about this number right now, it's fluctuating because market is live. Or the third option is to be really, what I would like to say, conservative. So the top one is aggressive, the middle one is moderate, and the bottom one is aggressive. conservative. That means you're picking the $70 call that is already $3.75 in the money. And then you are selling which one? Only 75. But 75 is only, what is that? Like $1.25 away from a target. And our target is actually, so I'm discriminating the conservative one because the spread doesn't make sense. Look, I will be in that case risking $272 to
I thought it'd be good to have a little private
less.
session, just given how the market's
This
acting.
just doesn't add up.
Kind of
you can
better
copy
idea, at
that
least what I'm
into
thinking.
risk graph. You can analyze it, and you can obviously.
It
copy.
is,
So
I
out
feel
of
like
it,
these
so
sellers are
this does
tentative.
not
I
make
feel like it
sense,
could be much worse.
in a way how
But
it
at the
works.
same time,
That's the reason
if you
why
look at what's
I
going
did
on
not pick that.
internally,
Right?
and
Once
I've left this screen
when I
up
had
purposely. I mean, it's
selected
pretty bearish.
the
I mean,
one
look
that
at,
I wanted,
now we're
which
starting to
was
get some weighted
my
sectors
bull
popping
call
up here.
side, right? Once when I
But
have
there's still
selected
so
my
much
bull call
malaise
side,
in
I had
tech
a
and in
unit
healthcare and in the heavier weighted
that was
sectors.
and I like to use a
Cumulative
military
tick minus
terms,
2,000.
commanding unit.
You got pretty solid breadth to the
I knew
downside.
now that I need to use
3 to 1,
same
so
strike price.
It's like a
For
mixed
the
bag. I keep saying the
put
same thing
side.
over and over, but I
And I
can't
didn't buy that
move
put.
past
Had
it
I
really, because
accidentally
it's like
bought
the
that
market.
put, my delta would be
You
zero.
would think it would be selling off
recognize
harder,
that?
but it's not.
Because
But
if
at the
this
same
is
time,
positive
we're
delta, and when
constantly
you buy the
buffeted by
put,
these
then that's
headwinds of
negative
news,
delta.
and
That would make
it's not
zero.
rallying
That
either.
would
So we're just kind of
absolutely make
stuck
no sense whatsoever.
in a range
So what
here,
I did
more or
with
less,
75,
which is
instead
like
of
kind of
buying, I
bearish
sold
to, sideways
and
to down.
selling of the put. So now I'm already doing the conclusion here of the lesson.
I still think
So
also
I'm
that
running
this
out
is
of
H
time.
pattern-ish, and we talked
Conclusion
before when this huge
is
reversal
that
happened
selling
that we were
of a
saying
put
we have to assume
is
that
a
this
double
low is
negative.
secure. And I'm still kind of working
Yeah.
from that
So that's
framework.
mean
The problem
I'm not
is that
bearish.
you can assume that low is secure, but we got a long way between
Bearish
here and that low.
becomes
So if the market decides that
bullish
the move
because
is just to
we
sort of
sold,
dribble lower
and specifically we
and
sold a put.
kill, it's going to be death by 1,000 cuts.
So the concluding point is
right? That
selling
can happen.
of the put is
it
a
can
double
just
negative.
take a long time
So
to just
bearish
sort of
put
very, very
becomes a
slowly
bullish
ooze
by
down
me
there,
simply
and kind of do something like this. So
simply
I
not
think the
buying
best
it, but
scenario
selling.
here,
But then
honestly,
what
is just
about
to wait
if
for the
all
trend
of a
line break,
sudden there's a peace, love,
to
and
play the
understanding all
short-term
over the
game
world, and
take credit where
energy is virtually free, like
it can
Nikola
be
Tesla
had. Like, for
originally
instance,
wanted.
I was showing you I was saying, look at the Apple on the
JP Morgan Chase
VXAZN.
says
It's
to
so
him, where
high
do we
here.
put
It's
the
moving up quite
meter
a
to
bit. It
measure?
makes
He's like,
sense
well, it's
to
free.
look
It's
at
in
those
air,
prior
like a radio
support
signal.
points, right? This
No,
is
we need to put the meter on.
that's Amazon, excuse
That's
me. I
the
meant
last time
APL.
Nikola Tesla was getting support from JP
Right?
Morgan
This is the
Chase,
move up
and
in the
you know history.
volatility
He
just in
got it.
Apple. So if that's
In a
happening,
hotel in New
and
York, Nikola
we
Tesla virtually
trust the
penniless,
support
and
in
the
the stock, and
government
this is
from
moving
Belgrade
up, then
had
we
to
should
actually
be
pay
taking
Nikola
advantage of
Tesla
that and selling puts into
hotel
it.
bill.
And obviously the
Yeah.
150 is the obvious
Yeah.
level because
So
they're
we
trading
bought
pretty
the
rich,
70
like over
put
60
just in
cents,
case we don't
and
have
it's
like
well
Nikola
below
Tesla
the
broke.
support.
So in
Notice
that
the move
case,
here was
what really
152.
happened? We returned some
Assuming
of the
that
money
that's
that we
secure,
got paid.
that's
But
where
there
we
was
want to be,
enough
and
money
that's
for
why
us. There was
I
a
structure with the unbalanced. I've
$230.
also got some
That was
naked
enough for
there.
us to pay
Can be
for
whatever
this
you want. Can be a vertical.
So what do we need
If
to
you
do
don't
now?
have
We
that kind
just
of
need to
margin,
put
you can do
the
it as vertical, 150, 140,
our
whatever you
order
like.
in for
Just
exit
be in the spirit of
when
the
it
trade.
hits our
Obviously, it's
target
credit
of
collection
the
because it's over 40 cents. It's a pretty
77.20.
expensive credit.
That's all of it is.
All right.
That's all it is. So I
Let's take a
have
look
about
at
8 minutes that I
NDX here.
purposely built in my
Same
lecture so I
situation.
can answer a question. This is time
Trend line breaks
for
that
you
have
to
failed
fire the questions
twice
in.
here,
They can
failing
vary
twice.
from
And again,
why you
assuming
did not
secure,
pick
but
April
don't know.
instead of it or something like that.
Could
So
be just
while
a dribble
I'm
lower.
waiting for that, I'm going to answer my own question.
And the
I'm just
Russell
kind
is
of
just
entertain the
messy and holding
possibility.
underneath the big
Had we
range,
done the same
but
thing,
not near
had
that
we done
low
the same
either.
thing for April, what
All
would
right.
be the case? Well, let me tell you the beautiful thing is
That's
with the
about
option.
it.
You can create a
We
duplicate
are
order
weekly
and
options
just change a
advisory.
cycle.
I know it doesn't feel
Let's
like
not
it,
go
but
weekly. Let's just
I think
pick
we're
the
doing
regular
well.
April.
I really am. I'm
And
not
then
trying
you
to just
unlock
like
this and you
sugarcoat
quickly
anything or
lock
sell
it.
it, but
And now you see
know,
it's a matter of
good adjustment in
5
Apple.
cents. That's all
That's
that the
not going to
difference
be a
is.
loss.
So instead of
SPY,
me
we're
getting
taking a very small hit
$230
after
credit
we
for the April, I would
made
get
the adjustment.
225.
And Amazon,
Okay,
we're not
let me
taking any
repeat this,
hit at all,
but I'm
even
going to
though the
repeat
stock is
this
literally down
with
like
the
150
call
points or
side.
something.
That's mean I'm
from
going to be taking the
where
call
we wanted
side.
it,
I'm going to be
2,900.
duplicating the
No,
order.
200
Instead
points.
of
200
duplicating the
points
order for
below
May,
where our
I'm going to
butterfly.
just say, give me the one for a regular April. So I'm picking now regular April 14 tax
you've
day.
got the margin. If you think about
This is going to change. It's not going to be 186.
50
I'm going
wide,
to unlock this.
that's
I'm going to
massive.
quickly lock it. And it's going to be saying then you're getting the what? 170. Okay? So in that case, if you go ahead and confirm it, it's like, well, I'm making slightly more. Well,
and able
yeah,
to
okay,
clear
so you're making
a very expensive
not
supply.
that
So,
much
you know,
difference. So again,
we're really in quite
why
good
would
shape.
you then not do that? Well, how about if you do what we did earlier? Look at the activity. And let me now just put this the way I like it. I do not like to look at the open volume. I like to look
go
at
to
the
Tesla today.
open interest. I look at the volume of the trading. Okay, here you have a 75 traded, only 16 contract. Now they inserted the single dollar increments. I would need to go down
the 175
and pull up at the 70. And what is it happening on 70? 190. As opposed to, in our case, having the what? 999 contracts. And that's higher than what we saw earlier.
The 160. So the only debit now is 30. And it keeps us in the trade.
I'm reading the questions here.
Which is good.
Trying to understand what it is. I understand your logic. Christian said, supporting the one of this is right under the current candle to this. Yeah. We're seeing here two voices. I don't know why you're hearing two voices for some reason.
Sebastian to come into the room. And
some other live site is also
give
speaking.
a listen so he can check out the
now?
choppy sound.
How about the sound now?
Yeah.
Is the sound now better?
All right.
I don't know. I mean,
so I've got him.
The only thing
in there
that's supposed to happen here is that you only hear me.
I apologize for that. That's usually something we can't control.
Create opposite order.
Caesar, I wouldn't put too much stock in like those big round numbers. Really, I don't. You know, the news.
Making sure that
the news situation.
It's not going to be a day order.
In terms of headline risk right now, is so much more powerful than that. It's kind of like. It's kind of like the jobs report this morning
order,
didn't
it's
matter.
Gonna be,
it really didn't. I mean, I know we had a rally on it when it first came out, and then it just fell back down.
The price
I didn't even look at what the number is because it's like
XLE,
you know they were actually saying it on Bloomberg
at or above. So it's very important for you
on
that you don't select the one that is equal to or less. You want a greater than. And we said that 77.
It was I think it was Lisa Abramowitz that was asking the guy the question. I don't know if you guys heard this morning. You know, saying like.
So now when I go over here
to jobs number even matter?
I'm going to look at right here my condition
going on. Like it could be whatever some crazy number. Does it come in at 150 million or 150,000 or whatever? It, you know, in the face of news, it doesn't matter.
When the price reaches 77.20, I'm going to send in.
That's a
ding,
and
then that sound that you guys are talking about probably
that
comes
concept of ruling reason.
From me sharing the sound from a Thinkorswim.
But
I shouldn't get the ding for a simple reason that I did not make a mistake.
What type of situation you're in, what type of market you have.
Trigger is when the price is
if you go against ruling reason, you'll be run over. But if you know ruling reason, then you'll be okay.
In 2006, I made a mistake. Instead of having the good till cancel, I actually had the day order. And market crash in 2006 that particular day. And I didn't get filled. And I got on the phone with the broker and I started giving them a hard time.
Is a little bit better?
How come my order didn't get filled? And then they track it and they recognize that I did have an exiting order at a certain condition. But because I did not put good till cancel,
the
target was hit and then it started going opposite direction. And I was still in a trade that was losing money. So I learned a lesson.
Scooter,
next
you hear me over there? What do you got on
close
sound-wise?
while you're still profitable. Then call the broker and try to figure out what's going on. So I did the put. What do I need to do next? I need to do the call. So I'm doing the same thing on call side.
Scooter says his sound never wavered.
So I'm creating opposite order.
All right, we're going to try. Sebastian's going to do a soft reset. Go ahead.
Setting buttons.
Do a soft reset.
Then. On that setting button. So
we might, Scooter, you might have to piece together these recordings.
So you guys can see it. Day order becomes a good till cancel. limit becomes
Actually, people are saying they refreshed
order.
and it sounds better. So
we're submitting this
maybe,
when
I don't know if we just
XLE
leave it.
reaches
People
a
saying that they
target
refreshed. Let's
at the
restart the
market
screen
price,
share.
but not when we are below,
do
but when
that.
we are above. And I'm
That'll-
going to put the same
let's see.
thing. 77.20. And I'm going to now confirm this. I'm going to confirm this. Let me just put here save. Confirm. It has a condition when the market is at 77.20, send it. I'm sending it in. I'm revisiting, and this is what the order is. So one more time, when I click this right here, it has this conditional order. Sell the vertical when the price of the XLE is
I guess sound is better now.
Above.
I'll just continue.
So we're just going to take
if you guys want to ask any questions as well on
snippet of that, and that's probably the
we're
last thing that I'm going to put inside of the Word document that later on I'm going to convert into Excel document.
Yeah, Gixxer
and share it with you.
asking about the H pattern.
So if there's no any other questions,
I think there's something to be said for it. This is the reason why I'm so tentative here, to be honest with you. Why you don't see me being all out bullish, all out bearish. I just can't, I think so many people falsely, and who knows, news-wise, like this, I could be proven totally wrong, but so many people just think that when they see this, oh, it's a rollover.
This market
like
without
this.
any
It's,
protection.
you can see that it's rolling over.
Thank you very much for attending.
But
Thank you, Mark.
This is not
Thank
what
you,
a down pattern
Christian.
to me
Thank
looks
you,
like.
Joe.
And like I said, that's
And
why
I'll
I
see
think the
you on
danger
Tuesday.
here
Have
is
a good day.
twofold.
Bye now.
Either